The market hasn't opened yet, but the work already has. This is a day in the life of a profitable trader. The pre-market read, the open, the trade, the journal, your edge automated. The goal of Profitable is not just to give you another chart. The goal is to help you build a trading review loop. That loop looks like this: reports, the plan, the playbook, the live chart, the journal, and the review. A lot of traders skip parts of that loop. They might do some chart analysis but never write a plan. They might take trades but never tag the setup. They might journal only the big winners or the painful losses but never build enough clean data to know what's actually working. So in this walkthrough, we're going to treat the day like a process. Before the session, we'll use reports to understand historical behavior. Before the trade, we'll write a plan and define the playbook. During the session, we'll use live chart context. After the trade, we'll journal the execution and review the stats. That's the workflow Profitable is built around. The first step is pre-market research. For this example, I'm going to open the ES Initial Balance Report. The route here is simple. Reports, ES, Initial Balance. This report is designed to analyze what happens after the market establishes its opening range. For the standard RTH Initial Balance, I'll use 9:30 to 10:30 Eastern. I can choose the time frame, the date range, the IB size filters, whether a breakout is measured by wick or close, and what extension levels I want to study. The point is not to find a guaranteed outcome. The point is to understand the historical tendencies around the setup I'm about to trade. Once the report runs, I'm looking for a few key stats. What's the average IB range? How often does price break out of the range? When it does break out, how often does that breakout hold? How often does it retrace? Profitable surfaces these as metrics like breakout rate, retracement rate, breakout hold, the 1.618 fib hit rate, average extension, and the percentage of days that close back inside the IB. This gives me a baseline. Either way, I'm starting with evidence instead of a gut feeling. Once I've looked at the report, I don't want that context to disappear. So the next step is the daily journal. This is where I turn research into a written plan. In the daily journal, I can record my pre-market plan, market bias, key levels, planned setups, and risk parameters. For today's example, I'm not going to write, I think ES is going up. That's too vague. Instead, I want a plan that connects directly to the setup. Let the RTH initial balance form from 9:30 to 10:30. Mark IB high, IB low, and IB midpoint. Compare those levels against GEX primary levels, 0 gamma, and nearby air pockets. Favor continuation only after acceptance outside the IB. Avoid chasing directly into a major GEX level. If price rejects back inside the IB, the continuation idea is invalid. Max 2 trades. Stop after the daily loss limit. That's a much more useful plan. It tells me what I'm waiting for, what levels matter, what would confirm the idea, what would invalidate it, and when I'm done for the day. This also gives me something to review later. Did I actually follow this plan, or did I improvise once price started moving? Now let's take this one step further. If this is a setup I plan to trade more than once, it should become a playbook. In Profitable, playbooks let you define the strategy you're actually trying to execute. You can track the symbol, time frame, rules, trade count, wins, losses, total P&L, and execution quality over time. This is what turns a random trade into a measurable setup. For this example, I'll use a playbook called ES Initial Balance plus GEX Continuation. The most important thing here is that the playbook defines the behavior before the trade happens. That means when I journal later, I'm not just saying I won or I lost. I'm asking whether I followed the specific process I said I would follow. That distinction matters. A profitable trade that breaks rules is not the same as a high-quality execution, and a losing trade that followed the plan may still be valuable data. Now we move to the live chart. Profitable's live page is where the planning context meets real-time market data. First, I'll add the initial balance indicator. The initial balance overlay can show the IB high, low, midpoint, extensions, price cards, previous IBs, and extension probabilities. For this example, I'm using the RTH 1-hour initial balance from 9:30 to 10:30 Eastern. The high and low define the range. The midpoint tells me whether price is accepting one side or rotating back through the middle. Extensions give me a framework for continuation targets. Next, I'll enable the GEX overlay. The GEX overlay adds options-derived context directly onto the chart. I can show GEX levels, zero gamma, air pockets, danger zone, and gamma-derived support and resistance. These are not magic lines, they are context. They show where options positioning may create areas of interest, where price might react, slow down, or accelerate. So now, instead of staring at the chart asking, should I buy this breakout, I have a better decision tree. Did the IB complete? Did price break the IB high or low? Is there acceptance outside the range? Is price breaking into open space or directly into a major GEX level? Is the next target far enough away to justify the risk? This is where the workflow starts to matter. Let's walk through a hypothetical example. The initial balance has formed, and ES breaks above the IB high. I can see the IB high below price, the midpoint inside the range, and a GEX level above. If price breaks the IB high but immediately rejects back inside the range, that's not the continuation I'm looking for. My plan says I need acceptance outside the IB, but if price breaks, holds above the IB high, and the next major GEX level leaves enough room for the trade to make sense, then I may have a valid playbook opportunity. Notice what's happening here. The software is not making the decision for me. Profitable is organizing the context so I can make a more disciplined decision. If the setup is there, I execute according to the playbook. If it's not there, the best trade may be no trade. That's a major part of becoming more consistent. Not just taking better trades, but skipping the trades that don't match the plan. For example, if price is breaking out but the entry is directly under a major GEX level, the trade may be too compressed. Maybe I wait for a pullback. Maybe I wait for a clean break and hold above that level. Or maybe I pass. The value is that I'm no longer making that decision randomly. After the trade, I log it. If I'm moving quickly, I can use quick entry to capture the essentials: symbol, side, setup type, result, risk, and playbook. For this trade, the setup type is IB, and the playbook is ES initial balance plus GEX continuation. That tagging is important, because it lets me separate this setup from everything else later. If I want a deeper review, I can switch to the detailed journal entry. This is where I record the pre-trade plan, execution notes, post-trade review, lessons learned, emotions, mistakes, screenshots, stop loss, take profit, planned risk reward, actual risk reward, and my MAE and MFE. A good journal entry might say something like, I waited for the IB to complete. Price broke above the IB high and held for 2 candles. Entry was aligned with the playbook, but I entered close to a GEX level, so the reward to risk wasn't ideal. Next time, I need either a better pullback entry or more room to the next level. That note is much more useful than just writing, good trade or bad trade. It gives me something specific to improve. At the end of the session, I review the day. The journal gives me a performance overview with total P&L, win rate, number of trades, and profit factor. I can review by day or week, use the calendar, and filter by symbol, side, outcome, setup type, and P&L range. For this workflow, the most important filter is setup type. IB. This lets me ask better questions. How are my initial balance trades performing? Am I better on long breakouts or short breakouts? Are my winners coming from clean continuation or from failed breakouts and rotations? Am I losing because the setup doesn't work or because I'm entering before acceptance? That's the difference between tracking results and improving a process. Then I finish the daily journal. What went well? What needs improvement? What did I learn? Did I follow my rules? Did I respect my risk parameters? This is where the day becomes a lesson instead of just a P and L number. So, that's a full day in the life of a profitable trader. Start with reports, so you understand historical behavior. Write the pre-market plan, so you know what you're looking for. Define the playbook, so the setup is measurable. Use the live chart to combine initial balance and GEX context while the market is moving. Journal the trade so execution is captured. Then review the stats, so you can improve over time. The key idea is simple. Don't just trade the day, review it. Profitable is built to help futures traders create that review loop, from market context to execution to journaling to measurable improvement. If you want to try this, keep it simple. Pick one market, one setup, and 1 week. For example, ES initial balance, 5 trading days. Run the report, write the plan, trade only the playbook, journal every trade, and review the results. That's how you turn trading into a repeatable process. This video is for educational purposes only. It is not financial advice. Past performance is not indicative of future results.